Hi, Richard here, and it's the 14th of December, being a Tuesday, and a lot of action on the markets overnight. We're looking at the US dollar index, which has pushed down heavily, and I've labelled this 3 to 4, meaning that we should see a wave 5 below this low. But the possibility is, of course, the alternate view is that in fact we'll find support somewhere down around the 78.6 mark, and then it'll push up towards 85, which in fact would turn this into an extended wave 3. However, in the short term, we're labelling this as a wave 5 to complete, which could form something like a double bottom along the this long-term trend line. If we go back to the weekly chart, you can see how long this has been in play for, January 2008 all the way through. And this spike high reversal is why I'm keeping the wave 4 in place, meaning that we should get a test down to this support line. If that is the case, then we're going to see a continued higher Australian dollar and higher gold prices. So moving on to the Dow Jones, just to get a read on that, because it was a fairly strong up day overnight in the States. You can see in fact it's a little doji star that looks like it's been created, and it's still hugging without any real commitment, even though the market feels bullish. In fact, we're still working this long-term support resistance line. And the same on the Australian market as well. You can see the long-term overhead resistance that's still very much in play. In fact, it spiked up through it and then fell back just to operate below. And so the targets, I'm not changing any of these targets. In the event that we come back down, this low would get taken out, 45.30, but in the event that this wave 5 is yet to unfold, then the first target would be 4900. So look, quite honestly, it's difficult to make the call. Certainly the sentiment out there is more bullish, and the closer we get to Christmas, well, we haven't even seen a pullback of any significance in the lead up to what I have been talking about as a Santa rally for quite some time now. Nevertheless, and this week's price action should unfold it. I wanted to show you what's happening in silver, because this is a classic blow-off market. Long-term resistance here that goes back to mid 2007, January 2008. It hit it a couple of times, or set in fact the trend line, and now we've had this spike high through up to over $30, $30.72, and then it's pulled back. But we've got this little bullish engulfing pattern that's set up this week. Whether or not that actually eventuates, because the week's only early, is yet to be seen. But that is certainly a reversal signal there, and gold is pretty much the same. There's a daily chart of gold, not much happening. Certainly there has been a little bit more bullish activity. Again, the sentiment suggests that it is. This support line here is holding up, and in the event that this high is taken out, we'd be targeting 1463. In the event that the US dollar actually doesn't do the wave 5 down and instead finds support, and the alternate option of in fact going into a third of a third, which is the most powerful leg, then we would see a breakthrough of this resistance and down towards this support line in pretty short order. The Australian dollar, we've talked about this head and shoulders, head, left shoulder, the right shoulder's come back up now. Certainly there was absolutely key support off the support line. The weekly reversal line has held up, and in fact we're trading this market long, and overnight it came within just a few pips, about 21 pips of parity, which is oh so close. But you can see that there is quite significant resistance there. So watching carefully tonight, Tuesday night, and for the rest of this week, to see what's likely to occur there. In the event that we get a blast through, which certainly isn't happening at the moment, then I would say this long-term resistance line here, up here at just 290 pips over parity would be certainly on the cards. So jury's still out, but the head and shoulders play hasn't yet been put to bed, but certainly is starting to lose favour. Just showing the euro. The euro's come up in an ABC. We thought that it was going to continue on down and track down to 2948, but it's decided that it's going to come up and retest this support line, and that's exactly what's happening, just as the Aussie dollar's retesting parity, but it hasn't been able to break through at this point. And here is oil, just finally, to show you we've got these key reversals happening. The support line is still in play. This is a daily chart, and at this point it's just oscillating between, as it can do. The oil puts in quite a lot of movement, sideways movement here, but I would say that at this stage, let's see what the market force is telling us, and it is telling us that, in fact, as the price action would suggest, we've got sideways activity. There's nothing to do until we get either a solid green bar or indeed a solid red bar to begin the new trend to the downside, if that in fact happens. But oil is not looking like it wants to go up a lot higher, except for spike highs. I'd say it'd pull back down very quickly. Well, that's it. Please go to themarketforecaster.com.au for all the price action on the charts, and I'll be shortly putting out also a series of charts on materials stocks, BHP, Rio, etc., as well as the financials, just to give you a read of where it's going there.